Hello, it is the latest Golden Way business news release. The gold market narrative has been driven by the contrasting effects of persistent high inflation and central banks raising interest rates in response. With the US dollar, USD, hitting a 20-year high, gold fell to a 3-month low at the end of last week. Slightly lower treasury yields and a dip in the value of the dollar on Monday brought the gold price off the low, but with the $1,700 an ounce range in sight, it remains well below the $2,000 level seen in early March. What are the prospects for the gold market for the rest of the year, given the current macroeconomic and geopolitical environment? Should you invest in gold now? In this news release, we look at the recent drivers and gold price predictions from commodities analysts. Gold struggled to keep luster as dollar rallies. The gold market closed at $1,808.20 an ounce on the 13th of May, having dipped below the $1,800 mark for the first time since the 4th of February to $1,797.20. Gold tends to trade in an inverse direction to the US dollar because it becomes more expensive for buyers with other currencies and does not yield interest. The dollar has benefited from the uncertain macroeconomic environment, with concerns about high inflation, the prospect of recession, slowing growth in China, and the impact of the Russia-Ukraine war, prompting investors to sell other assets in favor of holding dollars. Gold had climbed to a high of $2,043 per $30 on the 8th of March, a rise of 13.5% from the $1,800 level seen at the start of the year, as the Russia-Ukraine war escalated. That was close to the all-time high in dollar terms seen in August 2020, about $2,070, and a new record in euro terms. The US Federal Reserve, Fed, raised interest rates by 50 basis points to a range of 0.75% to 1% on the 4th of May, and the market is pricing in expectations of further rises in its next two meetings as inflation lingers near 40-year highs. That has the potential to limit upside for the gold market in the near future. A recession would be supportive to gold prices, but the sharp increase in interest rates being used to tackle inflation have so far been limiting upside for the precious metal. How is gold expected to trade for the rest of the year and in the longer term? Let's look at the latest analysts and price projections from analysts. Concerns about global economic growth, fueled by sustained inflation and heightened geopolitical risks, should protect the gold price somewhat. We expect gold to remain supported at $1,850 an ounce, with upside potential of $1,950 an ounce. Analysts at Canada's TD Securities noted on Monday that traders are reducing their exposure to gold as they anticipate the price remaining in a downward term. Speculative length and ETF positions continue to be sold off in gold, with precious metals sentiment becoming increasingly bearish. Importantly, CTA trend followers have also joined into the liquidation party, and with prices now below the bull market defining uptrend as well expected, a significant liquidation event may now be unfolding as these funds target a large net short position. With the Fed telegraphing their every move, Fed speak this week will be increasingly important, particularly as positioning is continuously squeezed with bearish sentiment building. Analysts at Heraeus also wrote in their recent gold price outlook, "Now the trajectory of interest rates appears set for the next few months. If inflation continues to be high, keeping the Fed behind the curve, gold could resume its rally." The price will need to clear its April high of $2,000 an ounce to suggest there is more to any rally than just a rebound from oversold levels. US-based Citibank is bullish in its short-term outlook for the gold price in 2022. Nominal gold prices may hold a higher range for the balance of 2022 as financial markets grapple with surging headline inflation, geopolitical uncertainty, and recession tail risks. Analysts wrote last week, Citibank has a 0 to 3 month forecast of $2,125, but it expected the price to fall to $1,900 in 6-12 months and $1,760 over the long term. Algorithm-based forecast site Wallet Investor was bullish in its long-term projections, indicating that the gold price could move to $1,943 by the end of 2022 and continue to rise over the next 5 years to $2,803. When considering a gold price prediction 2022, it's important to keep in mind that high market volatility makes it difficult to give long-term estimates. As such, analysts and algorithm-based forecasters can and do get their predictions wrong. Golden Way: think different, earn different.